Assalamualaikum. Our group represents a group assessment titled Public Tax in Malaysia. Our group's member consists of Encik Besari bin Mat Daud, Nabila Amelia binti Zakaria Syazaliana binti Anwar Muhammad Hasbi bin Hashim, and Wan Kamaruddin bin Abdul Rashid. The title assessment is Public Tax in Malaysia. For the introductions, I present the definition of taxation could be a term for the when the taxing authority, as a rule, a government levies or impose the budgetary commitment on its citizens of inhabitants paying charge of governments or authorities has been a pillar of civilization since the antiquated time. Income tax in Malaysia is regional in nature. The first income tax was present within the Federation of Malaysia in 1947 under the Income Tax Ordinance 1947, which was at the beginning with present in 1957 in Sabah and Sarawak in 1961. Despite of the fact the taxation can be a thing or verb, it is ordinarily alluded to as an act. The coming about income is as a rule called taxes. As financially critical, they are utilized to advance goals such as a full employment, satisfactory financial development rates, and steadiness of the cash supply. An illustration
Assalamualaikum, my name is Syazaliana. Here I will discuss the objective of taxation. Firstly, source of government revenue. Government revenue come from all revenue and income except zakat, fitrah and other baitul revenue. Tax are the main resource of income for the governments in the world. The revenue from this tax is used by the government to manage a country and also for development expenses or direct assistance to the local population. Second, economic growth booster. The taxation system is considered as a means and channel to promote economic development. Economic growth can grow rapidly when it is encouraged by the taxation system and also when there is a taxation system that can minimize constraints and economic development. Third, tax as a tool for income and wealth redistribution. Taxes are contributions from people who are able and have excess income to the government to be redistributed to the poor. Community well-being can only be realized if we can ensure that everyone in the economy achieve a perfect standard of living. Fourth, to regulate the production of certain commodities. The government imposed heavy tax on the production of the commodity. This can reduce demand and subsequent consumption. The government imposes tax on goods that are harmful to the health of consumers, such as cigarette and alcoholic beverage. Lastly, to control monopoly power, certain taxes are imposed to curb monopoly power. Such taxes include excess profit tax, when there is a monopoly power that want to make a profit and allow to maintain the market price.
Assalamualaikum warahmatullahi taala wabarakatuh. My name is Wan Kamarudin bin Abdul Rashid, and today I'm going to explain about Malaysia tax system. Okay, as general, Malaysia is one of the countries who executes the regional tax system. Fundamentally, any paid collected inside Malaysia. And in Malaysia, there are two types of tax. Firstly, it's called as direct tax, and second is indirect tax. Okay, what is indirect tax? Indirect tax is a portion of the value by which has been added a component and are considered as a cost of a certain manufacturing. And this type of tax must be included to the cost of the merchandise and administration. Okay, for the indirect tax, the government agency who in charge for this type of tax is the Royal Malaysian Custom Department or Jabatan Custom. The example of indirect tax we can see is service tax and sales tax. Okay, next one is direct tax. The government in charge for the direct tax in Malaysia is the LHDN or Malaysia Inland Revenue Board. It is the charges on profit or incomes that are not within the frame of production costs, and it represents the distribution of cash from the private segment to the government. The example of direct tax is normally is income tax. Okay, let's see what is the type of tax. Okay, among the tax that has been imposed in Malaysia, some of them is corporate income tax, personal income tax, sales and service tax, stamp duty tax, and withholding tax. Okay, let us see one by one. Okay, the first one is corporate income tax. It is the direct tax paid to the government imposed on both resident and non-resident companies that receive income from Malaysia. Okay, the tax is imposed by Inland Revenue Board Malaysia or LHDN, and it is governed by the Income Tax Act 1967. Okay, those who have the paid up capital of 2.5 million ringgit or less are taxed at 17% on their first 600,000 ringgit and 24% for winnings over 600,000 ringgit. Okay, the resident or non-resident companies earning the income within Malaysia are taxed at the rate of 24%. Okay, next one we go to personal income tax. Personal income tax is imposed on salaries, dividends, or any other kind of income by which the person earns throughout the year. For those who work in Malaysia for more than 60 days a year, they are required to pay the income tax. And this type of tax is governed by the Income Tax Act of 1967. If the expatriates who work in Malaysia for more than 60 days a year, they are all required to declare the income. If they work more than 60 days but less than 182 days per year, they will be considered a non-resident and subject to a flat rate tax of 30%. Okay, the next type of tax is sales and service tax. It is a single stage tax charged on taxable goods manufactured in or import into Malaysia by a taxable person, and it is due when the goods are sold or disposed of or first used with a total sale value of more than 500,000 ringgit within 12 months. The taxable rate for this type of tax is between 5% and 10% on products, also 6% on services. The products like rice, flour, certain medicine, or the first 300 units of electricity are subject to the zero rate. Okay, in this type of tax comprised of two elements, which is a sales tax and service tax. Okay, let me see one by one. Okay. Okay, what is sales tax? It is a single stage tax imposed on products manufactured and produced locally and on taxable goods imported into Malaysia. As for the rates, 5% will be imposed for goods including basic foodstuffs, building materials, fruit juice, personal computers, mobile phones, and watches. And 10% will be imposed for other goods except for petroleum subject to specific rates and goods that are not exempted. Okay, for the service tax, it is a consumption tax imposed on taxable services provided in Malaysia by a registered service provider who carrying out their business. As for the rate, 6% for all the taxable services. And the services that are imported or exported are exempted from the service tax. Okay, next is stamp duty tax. It is also known as documentary stamp tax, by which it is placed on the transfer of homes, buildings, copyrights, land, patents, and also securities. The government collecting the stamp duties on documents that are needed as for the evidence for certain types of transactions by which being completed. Okay, the examples of documents such as marriage, military commissions, and sale or transfer of a property or asset. As general, stamp duty tax is divided into two categories. Firstly, it's called as fixed duties, by which it is charged at a set price and includes stamps for individual policies or copies. The second category is called as ad valorem duties. It is a variable cost based on the value of a transaction that the legal documents represent, and this include tax such as those based on the value of a property transfer or loan agreement. And last but not least is the withholding tax. This type of tax is imposed on companies that have the obligation to pay the non-residents, for example, company or individual, for the service engaged where a certain percentage of payment is deducted and paid as their income tax to LHDN. An amount withheld by the party making payment, by which here we call as payer, on income earned by a non-resident, or we call as payee, and paid to the LHDN. Okay, who is the payer and the payee? The payer are those who carrying on business in Malaysia and is required to withhold tax on payments for service rendered for the use of the movable property and paid to the non-resident. As the payee, they are the non-resident individual or body who receive the payment. Okay, that's all for me about the type of tax. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. I'm Nabila Malina binti Zakaria. Now this is my part, issue and children in taxation. Okay, smart taxation. What is smart taxation? This is the government required to limit or dispense with pointless tax breaks for firms and attacking twin trade in Malaysia. Charges may be utilized to energize, investigate, improvement, R&D, in particular business agreeing to the proposition. Third point is the government ought to seek after an expansionary methodology or ways is used in budget 2020. Okay, the second one is a sales tax. What is a sales tax? What is consumption tax imposed by the government on the sale of goods and services. Second point is conventional or retail sales taxes are only charged to the end user of the good of service. The point is different deals charge exception ought to be considered in any case they are subject to extreme and numerous criteria for compliance. Yes, third is point is service stats and goods and service that is called the GST one lah. Okay, the goods and service that GST is a value added tax VAT levied on most goods and services so for the domestic consumption. GST is paid by consumers, but it is remitted to the government by the business selling the goods and services. The tax is included in the final price and paid by consumers at point of sale and passes to the government by the seller. The GST is usually taxed as single rate across a nation. Governments prefer GST as it simplifies to the taxation system and reduce tax avoidance. Critics on GST says it's burden lower income earners more than income earners. This is the last one for issue, that is tax evasion. This is an illegal activity in which a person or a same entity deliberately avoids paying a true tax liability. Evading taxes are generally subject to criminal charges and substantial penalties. To determine tax evasion, the agency must be able to show that the avoidance of tax was willful on the part of the taxpayer. While tax evasion is illegal, tax avoidance includes finding legal ways within the law to reduce taxpayers' obligations.
Good evening to our lecturer and our group member. Today our group will present about suggestion and recommendation in taxation. Firstly, the implementation of GST in Malaysia must be incorporated into the larger objective of achieving fiscal sustainability. Secondly, introduce initial GST in Malaysia rate at 5%. The differences in the cost of consumption behavior adjustment for a 4% and 5%. GST in Malaysia are expected to be small given that the introductory rate is still lower than the existing SST. Enforced display of GST in Malaysia charges on price tag. All type goods that are chargeable by GST in Malaysia should display the actual amount of tax payable on the price tag. Lastly, strengthen cooperation with local consumer society to fight counterfeiting activities. Individual customers who are the victim of profiteering activity are less likely to take action against irresponsible traders. Another point we would like to suggest and recommend in taxation is smart taxation. Change remuneration to reimbursement. Salary employee was fixed allowance given by employer such as mobile subsidies and parking fees are taxable as they are considered part of our employment income. File for separate tax assessment for both husband and wife or married couple. Command high salaries during the assessment year. Husband and wife will both pay less in taxes if file for separate assessment. Last but not least, mitigate business losses. Another trick for married couple, if you are running a business and have unfortunately incurred some financial losses during the assessment year, one way we can mitigate these losses is by filing for joint assessment.
For conclusions, in Malaysia, there are few common tax in Malaysia that have been utilised, such as a corporate tax, personal income tax, sale and service tax, goods service tax (GST), stamp duty tax, and withholding tax. Arranged to assure the tax collection system progress from day to day. Innovation from the tax system is utilised. The